My name is Joseline Nicholas, and I'm here with Farhan and Sakshi. We're very excited to have this webinar tonight. We're going to be talking about raising interest rates and inflation and how that is impacting real estate investors. So I'm very excited to kind of see your point of view, Farhan, because I have my own point of view. So it'd be nice to see, what you think and how you've been experiencing this and versus what I've been experiencing.
Hi everyone, my name is Farhan Mahmood, and thank you, Jocelyn, for giving me this opportunity to have this conversation. I know you and me we both have been incredibly busy lately, so we haven't had a chance to do a webinar for a while. So it's so exciting to share our thoughts, and also I get to learn how you feel about it because this is a territory we haven't been there for a long time, and it's very exciting on what's happening with the real estate market and how it's no longer a seller's market, it's a buyer's market. So for years we were waiting for it and finally seems like it's arrived. So it's in some manners it's a bad news, but in a lot of manners, especially for investors, it's a great news. And especially some of the people I'm working with, they are so excited at the moment because what they couldn't pick up a few months ago for fairly high prices, now they can pick up for a reasonable price. It is exciting to be in this marketplace, so on and so forth. Before I go into Jocelyn, inflation and all those things, I want to get a bit of your point of view and want to learn from you. You are the most successful realtor I know of in Guelph, Kitchener, Waterloo, Cambridge neighborhood. How you finding everything? I know you've been doing a lot of deals lately. How you are adjusting to this new reality where there is not a lot of multiple offers and seems like buyers can demand more at the moment.
To be honest with you, there are two sides to the coin. So I'm a realtor, so there are times where I'm representing a seller, but there are also times I'm representing a buyer. On the buyer side, it's really fun because now we can get creative and we can negotiate terms that are more favorable to the buyer as opposed to a few months ago. And that is what excites me as an investor. So from an investor perspective, we have more homes to choose from. We can negotiate better terms. In fact, sometimes we're seeing conditions that we haven't seen in a while. For example, condition on selling another home or firming up another property, things like that. So it's really exciting on the buy side. However, on the sell side, it's not as exciting because the sellers, they're taking too long to adjust and understand that now we're stepping into a buyer's market and that the buyers have power versus the seller having power. So it's depends on whose side you're on. And I'm seeing myself be on both sides quite often. But it's interesting to watch.
One of the things, Jocelyn, I've heard from some realtors is that their business has slowed down. People are not buying as much or exchanging real estate as much as they were doing a few months ago. Have you found the same thing for yourself, or do you see yourself getting more busy?
To be honest with you, I actually am seeing myself being busier than the average agent, and I'm thankful for that. And part of it is because a lot of my clients are investors. So a lot of these investors are coming back and taking advantage of the market. I do have a larger number of clients who are just waiting. Like people I've been talking to for a few months, they want to wait and see where the market goes. But I cannot say that I don't have much work to do because we're still busy. We're still getting deals done. And I'm thankful because a lot of my clients, they understand what's happening in the market and they want to take advantage of it.
And to be honest with you, we have had the busiest month. I was just running through the number. July is going to be the busiest month we have ever had since I've been a mortgage broker.
Yeah.
So in one side, yes, real estate is slowing down. There is interest rates have gone up. There is not a lot of people taking mortgage financing. But on the same time, this is a time where, an average mortgage broker is not able to do those deals, which, if you have the ability to write good business cases and you have amazing relationship with lenders, you're able to get those deals done. So in so many aspects, we are more busy at the moment than we have ever been. And I was really hoping to catch some break and, spend some time with family, but seems like that's not happening, and we're still trying to catch up on all these changes and so on. And it's very exciting. It really is on what's happening on the mortgage side from investment point of view.
Absolutely. And you know what? These are good problems to have. So right?
They are, they are.
Yeah,
No doubt about it. They are amazing
yeah,
problems to have. I don't want to be in a position where I'm not busy and I have to call. I
yeah.
don't think I have made a single sales call calling someone for at least last 4 or 5 years. And
Wow, that's
it would be
good.
very
That speaks
difficult to
to
get
the,
adjusted in that in that environment where I have to call and get a client
yeah,
or get a partner who is willing to work. It's obviously it's been the other way around where I've been blessed enough that I have been saying no to people and
yeah,
so on and so forth. But before we go into other details, I just want to jump into a bit of what's happening with inflation, what's happening with interest rates. Do people really need to panic? Do we need to make some changes in terms of their mortgages? And I also want to have a conversations regarding there's a lot of people and especially a lot of my client bases and investors who have variable rate mortgages and they have been experiencing that the payments, some of them have gone up $1,000 a month, right? So
yeah,
it's getting to a point where it is panicking. Some people are panicking. So I want to address those positions and kind of give what I feel like is going to happen in the next few months, in the next few years with the prime rate and so on. So Sakshi, if you don't mind, let's go to the next slide. Okay, and give kind of an overview. Obviously, as everyone is aware, Bank of Canada did major interest rate hike. Including me, most of the mortgage brokers, I can say, and some of the lenders, nobody expected a 1% rate hike. We all expected maybe 25 basis points, 50 basis points. Some were predicting it might be 75 basis point, but the rate hike was much more than anyone was anticipating, and that did have a negative impact on the market. That's why we have seen some of the market prices going down in the real estate place. It's just because a lot of people lost confidence in buying a home right now. Or someone who could afford a $3,000 payment, now suddenly their payment's gonna be, $3,500 a month, and they don't want to make those payments. So as a result, people are staying back, stepping back, especially investors, and opportunities coming in the marketplace. What's happening with Bank of Canada has a lot to do with overall global economy, with the inflation being as high as it is right now, and all the factors which are playing into everything getting expensive. Bank of Canada is just trying to control inflation by raising the rate. I see it as a temporary measure. I don't see these rates being in effect in the next couple of years. I do expect towards next year they will start going a bit down. So yes, the payments have gone up. Yes, it's more higher payment. But on the same time, if you are someone who is jumping into real estate market, you have to understand the property you were getting for $1.1 million 4 months ago. Today, you can get the same property for 800 or $850,000. The market has taken about, especially in the woods we are, me and Joseline, Guelph, Kitchener, Waterloo, Cambridge, market has taken 15 to 20% hit at a property which was closer to $1 million. It's down. So there is an amazing opportunity to get into the market. Very much like how the rates have gone up, similarly, the rates are going to go down. And when they do, the investment you have made at the moment is going to be much, much more profitable. There is also a flip side to it, and that is rents. And the market rents have gone up like there is no tomorrow. I was just going over some reports a couple of days ago, and an average rent in Kitchener, Waterloo, Cambridge, Guelph, it's almost gone up 15 to 30% depending on the type of the property. So in one aspect, yes, the prime has gone up. It has increased the payments of monthly mortgage payments, but also the rental income have gone up. Now, I do understand if you have an existing property, it is a bit of a burden, but it's a temporary burden. And we should take that with a salt of grain and go accordingly that, it's gonna come down. It's not gonna stay at this level. Sakshi, do you mind going to the next slide? So this chart really outlines the Bank of Canada's rate in the last few months. If we take a look into the last 1 year, benchmark rate was at 0.25%. It has gone to 2.5%. There has been a substantial increase in it, which has taken the mortgage payment higher. Now, do keep in mind where it was at 0.25%. it was unrealistic. That was only due to COVID, and Bank of Canada had done that just so people do not sit at home and don't spend any money, which was happening as COVID started. Everybody just stopped buying. There was no activity happening in the marketplace initially. So Bank of Canada reduced the rates in order to encourage people to spend more and more money. And that's why the prime rate was so low. People took advantage of it in the real estate marketplace where variable rates, we were setting them up between 1.1 to 1.4% about a year and a half ago. Now that has gone up. Variable rate mortgages are more closer to 4 to 4.5% interest rate, depending on the lender and the product and amortization. But they are at that point at the moment just because of the rise of the prime rate. But the alternative of it is, as we are gonna go ahead, I don't see target rate being staying at 2.5% once we start seeing slowdown in consumer demand, as well as some layoffs which are bound to follow this. Then we're gonna see the prime rate maybe start taking downward. I honestly, from my research and so on, I believe it's going to be more closer to 2% target rate where they're going to be keeping it. That means our prime rate is going to be for mortgages around 4.2%, and average mortgage is going to be around 3 to 3.5% interest rate, which is not a bad rate. But that's where I think it's going to come down to in the next 2 to 3 quarters. Jocelyn, what's your thought about it? I know you are an investor, you have multiple properties, and I'm sure most of your payments have taken a increase. How are you coping with it, and how is your clients coping with it?
So that's a good question. What I've seen among my clients, those who are struggling are people who bought properties that don't cash flow. So now those who have condos or one unit properties, they are struggling because now rates have, especially if they have a variable rate. So now they are struggling to pay their mortgages, or especially those who are just closing on those units now because they only have one unit. My portfolio has a lot of multifamily properties, which were cash flowing on average about $1,000 a month. So, and we do have some variable rates on some of our properties, but that hasn't been a problem because we have good cash flow to work with. What gives me hope is that, like what you said, that this is not a permanent change. Things go up and down all the time. As an investor, I think it's good to be prepared for situations like these. And when they arise, then you're in a better place to, at least stay, like basically keep everything going until you're ready to move on to the next stage. So for us, it's been cash flow, cash flow, cash flow. And I feel like even if it continues to go up on those properties where our mortgage is variable, we're okay to hold that position until things get better. So that's kind of my experience.
You're absolutely right. And that's personally, I'm in this exact same boat. A bunch of my properties, the interest rates have gone up, the payments have gone up. But I understand it's a cycle. And as you know, some of our tenants move out and new tenants move in, the rents have gone up too with it significantly, right? So it covers it up. Now, I have been receiving a lot of calls from my clients panicking about, the rates going up, them feeling that they're not able to afford the mortgage payments and so on. And that is true. Some of the people, they have overpaid for properties significantly. They have bought homes which they're not able to afford. So we are going to see some of them having difficulty with it. But what I am recommending my clients at variable rate mortgages are cycles. So they go up, they go down. It's just a cycle at the moment. Just stick with it and survive a year or 2 years, and it's going to come down. And panicking, switching to a fixed rate mortgage or changing your mortgage lender, going to another lender who keeps the payments the same or so on, are not generally the best solutions at the moment. Again, consult a professional. Maybe your cash flow situation is very different, but in most cases, sticking to what you have is generally the best solution. And you don't need to panic to switch to a fixed rate mortgage. Alternative to that, like, this is the challenge I see with the fixed rate mortgages a lot of time. And I was talking to a fellow mortgage broker, and he was like, we are damned if we recommend fixed and we are damned if we recommend variable. Fixed rate mortgages carry very high amount of mortgage penalties if there is any kind of change. And so many times I have seen that people sell a home not knowing what their mortgage penalty is. And when they're signing the paperwork at the lawyer's office, they figure out their mortgage penalties 30, 40, 50, 70. I had a client not too long ago, his penalty was $95,000 with one of the major banks at a fixed rate mortgage. Changed their life completely. And had they had a variable rate mortgage, their penalty would have been less than $5,000. So sometimes people make these rational choices, which look great to them because the interest rates are going up on the prime. Going to fixed rate might sound like a great option. And in some cases, it is absolutely. But in most cases, it's not. So again, reach out to a professional, have a discussion, look into your cash flow and see what you can do. With some people I have recommended, you have a basement apartment, why don't you rent out a basement apartment? So instead of worrying about your payment going up, that income which is going to come from the basement apartment is not only going to cover your increase, it's also going to give you some extra cash flow. There is other clients of mine which have reached out, and my recommendation have been to them is that you might have to look for a job which is paying you a bit more money, because what employees were making last year versus what they're making this year is a lot more. We have seen a substantial rise in income for a lot of people. Jocelyn, what are some of the recommendations you've been telling your clients in order to increase their cash flow?
So for me, a lot of my clients, those who buy through me, I've told them to buy multiple units. I find that is the easiest way to cash flow when you have more than one unit. So that's one thing that I've been telling them. Another, of course, is if the property becomes vacant, then obviously they can rent it out for higher rents. But a lot of them right now, they're in a position where they just have to hold that position until things get better, right? You cannot kick out your tenants. You can't panic and sell. You just have to hold that position until things get better.
You're right. And I personally believe that the property values are going to go back to the level we were in February, March. Might take a couple of years, but it's going to go back. And the factors are clear, there is more immigrants coming in. We don't have enough houses, and construction costs have gone through the roof. I have a bunch of builders, I do their financing, and the houses they sold in 2020 or 2019, which are coming up for occupancy or transfers at the moment, builders are losing money on it because the cost has gone up so much that it's an average house is costing a lot more money to build, and it's getting more and more and more difficult. So what we are going to see is we are going to see a lot of people moving into a home with a family member or with their friends and so on. And Jocelyn, me and you, we both have clients which we can see that, couple is going to be moving upstairs and their brother is moving into the basement apartment, and all three or four of them are going on the title in order to make it work. I have done multiple mortgages this year where two couples are getting together, and instead of none of them buying a home, they're buying one home together and they're going to live in it, one in the upper unit, one in the lower unit, in order to make it work. And construction is changing with that as well. I was just looking into a new development. One of my builder friend reached out to me, and he's building homes where the basement level is going to be a completely separate unit, main floor is going to be a completely separate unit, and the third floor is going to be a completely separate unit. This 10-15 years ago wouldn't have sold at all, but now he has to change to the changing demand of the market, and he has to change his strategy. So the new unit he's going to be building, that's the unit he's going to be building, where there is going to be 3 units located in one dwelling. And we're going to be seeing more and more of that as we go forward. Okay, so again, inflation at the moment is about 8 to 10% interest rate. They want ideally inflation to decline to about 3% by the end of 2023 and by 2% by the end of 2024. That's the goal. If you go through a lot of data, I personally believe it's going to happen sooner than that. Okay, as quickly as the demand has gone up for the things and how expensive everything has gotten, it's gonna come down. There is some external factors which are truly impacting this. Russia-Ukraine war is a great example, because a lot of grain is exported from Ukraine, and a lot of energy of Europe is coming from Russia. If that war comes sooner to a close, we will see our inflation going down at much quicker pace. Now, if it goes around that it drags on for a longer period of time, then we might be in a pickle where the interest rate might stay a bit higher, but nobody knows. So again, the best preparation which we can take a look into, if that war continues, I do see our economy going into a recession. And as soon as employer starts laying off people and people start losing jobs, we're going to see Bank of Canada reducing the interest rate just to infuse the economy one more time. Again, just some basic things about businesses and their inputs. Labor cost, what we have seen for a lot of businesses, especially when we are looking at their cash flows, labor cost has gone up quite a lot for employees because inflation has gone up quite a lot. And yes, one of the argument I've been hearing from a lot of my clients is that their income hasn't gone up if they have stayed with the same employer, but if they have shifted their employer, generally they do see a 20 to 25% increase in their income. And we are seeing a lot of people leaving their 15-20-year-old jobs and moving to a job which is paying more money, because that's the only way to take care of it. Now, as the production rises, we might see some salaries going down with it and the inflation coming down as well. Again, some activity on the housing market, as we're going to see the interest rates are going to go up, there is going to be demand for the housing is going to go a bit down. But you have to understand there is a lot of immigrants coming into Canada. They all require housing. It's not something people can pass on. What we are going to see is that construction is going to restart, and the way it's going to restart is there is going to be more housing getting built, and as the new housing comes, the existing housing is going to go back to the level where it was, because the construction cost is so much higher today to build. We are also going to see very high level of renovation and people completely demolishing properties and building new homes, or old lots getting demolished and getting new homes built. We have already seen in Toronto, I don't know if it is confirmed or not, but I was reading the report of City of Toronto taking away development charges if you are building less than 5 units, which is a great step, especially in the older neighborhoods where there is huge lots. A lot of homeowners should have the ability, or the small developers should have the ability to demolish that home and put more units on it to tackle this. Projected both in the long term, housing is bound to go up. That's just the way housing markets work, right? Like it's just a temporary cycle where we have seen a dip and it's going to start increasing again. Jocelyn, what's your thought about what's happening with the construction market? I'm sure being a realtor, you are seeing a lot more emails from the builders. What are you seeing? Are you seeing more units getting built, or are you seeing less units getting built as the time's going forward?
So what we're seeing right now, I guess from my end, is we're seeing a lot of inventory. So now builders have more inventory, but my thought is that they already had this in plans. The market shifted, the demand slowed down a lot. So now they don't have enough people to buy their existing inventory or units that they were already planning to build. Some of the builders are just continuing to build those homes as spec homes, so they will sell them after completion. But I've seen some builders who put things on hold until they sell those units. So it's a mix of both. It's interesting. And I think for pre-construction right now, it's an interesting space to be in, because another thing that I'm thinking is very interesting is people who bought pre-construction units a year or two ago, calculating a 2% or 1% rate on their mortgage, and now they're having to pay 6%. Some of those people can't afford to hold these homes. So we're seeing a lot more new homes, I guess, come to market because they're just too expensive for the homeowner to hold.
Another trend which I'm seeing, Jocelyn, is the development charges which builders are charging. That's much higher than what it was before. And that's something a lot of people who have bought new homes, pre-construction, have to keep that in mind. That on top of their regular down payment, land transfer taxes, paying for appliances, paying for AC, because most of the time the AC is not included, paying for basic needs of the home, such as blinds and coverings and so on. On top of that, you have to keep in mind about development charges. So a lot of people do not think about development charges when they are signing an agreement, but they are a huge expense. So if you are one of those people who have bought pre-construction, make sure. I have seen people losing all of their deposit because they did not have money to pay the development charges, and builder just took all of their money and did not even extend one single day of closing for going forward. And you can cry, you can complain, you can criticize, but when you are signing that builder agreement, you have very little flexibility. Pretty much all the flexibility lies with the builder, and as a homeowner, you have very little flexibility. Jocelyn, now I know
I
you
saw
have
an
a lot.
article.
So go ahead.
No, I was gonna say I saw an article this week that there's a developer in Toronto who's charging between 70,000 and 170,000 for development fees. And the buyers are just finding out now a few months before closing.
Yeah, I saw that. And the purchase price on those properties, they are condo apartments, and the purchase price is
Yeah.
500 to $700,000. Now imagine if your purchase price is $700,000. Now you're hit with $170,000 development charge bill. That's 25,
Yeah.
30% of the purchase
Insane.
price. I saw in Melton, developer and charging almost close to $100,000 on a detached home of $1 million in development charges.
Yeah.
Uh, there was recently,
It's
I was
crazy.
reviewing in Chatham, there was another developer there, and he was charging close to $70,000 in development. It's insane how much those add up. So you have to be very careful when you are buying up pre-construction. In my mind, pre-constructions are much more complicated than buying in the secondary marketplace, because
Yeah.
where the neighborhood is, what the comparables are, what the cost is going to be. There is no development charges, there is no expenses for appliances, there is no money you have to think about from upgrades, because generally uh, what you buy with the builder initial purchase price, that is very basic home. um, and as Jocelyn can attest, because recently she has an opportunity to buy really nice house for herself.
Yeah.
Upgrades can cost you a lot of
A
money
lot of money. Yeah. And it adds up pretty quickly.
very quickly, right? So you have to
Yeah.
keep all those areas into perspective. And the goal is that, what I recommend my clients is that, make sure you get your purchase and sale agreement reviewed by a competent lawyer. Um, Again, most of the lawyers, they wouldn't even bother reading the agreement. They would see a big builder sign on it and they will say, it's good, nothing to worry about, right? But the reality is you have to go through all of those small details in uh, make sure your development charges are capped, make sure your levy charges are capped, make sure that you are aware on all the basic things you are getting. And a lot of time taking an upgrade from a builder is not worth it. And
Yeah.
the way they try to sell you is that your house is going to look terrible if you don't take these upgrade. Who cares? You're going to be fine. You
Yeah.
can do those upgrades couple of years from the time you buy it at half the cost what builder is selling you at. Again, that
Yeah.
option is not available with everyone, but if really take a look into details of that agreement before you sign it. I'm seeing a lot of builders stop building at the moment. And the reason behind is their cost is too high and they know they are not able to get this price what their cost is. They won't be able to recover their cost. So yes, we have listings at the moment on the market. At the moment, there is a lot of supply available. But as the population increase and builders do not build as much as they were building in the past, we're gonna go back into sellers market no matter what the interest rates are, right? So
Yeah.
we have to look at it from that point of view. That as builders stop building as much housing as they were building in the past few years, we're going to see some challenges and it will go back into sellers marketplace. All the policies of the government, they have an immediate impact of stopping investors, right? What we have seen is kind of, and Jocelyn, correct me if I'm mistaken, but at least from mortgage point of view, all of my uh, not all, but a lot of my investors have just taken a side back and they are sitting back and they are not buying anything. I have also seen a lot of my first time home buyers, which we did the pre-approvals, they're saying, oh, we will wait for the market to correct itself and then buy, right? I think that's a bad approach. I truly, truly believe that the time to buy is now, instead of waiting few months. And again, when the bidding starts and you're overpaying for the property, that's not the time to buy. The time to purchase property is always when there is a good deal. Um, And what we are seeing is investors who are seasoned investors, who have been through few cycles, they are very optimistic and they're buying, right? And we saw those investors when people were selling at higher price, they just got rid of their inventory. What's your thought process, Jocelyn, as you see, a lot more listings coming up? What do you think is happening with household spending? What do you think is impacting this to an average homeowner?
You know what, Farhan, I love that you brought up that point about timing the market, like selling when everybody's buying and buying when everyone is selling. Like when it works out, that is perfect. Another point of view that I've just been thinking about is how about maybe we think of investment as a long-term strategy, you know? So in this time when everyone is selling and there's very few buyers, it's the perfect time to find an opportunity, right? And you just said that a lot of experienced investors, a lot of people who intentionally are here to build wealth, they are buying now. Why? Because now is the easiest time to find a motivated seller. There are a lot of sellers out there who've already bought properties. They've already bought a home because that's the advice they got in January and February. Buy because, you know, it's easy to sell your home. So now those people have already bought, and a lot of them had a price in mind. So they've been refusing to sell their home all these months because they have a price in mind. And the market is going down. Now they can't hold two homes. So once you find a motivated seller, this is when you find the best deal on the market. Yes, rates are up, but if you just hold that long enough, if this is for your kids' education or this is for your own retirement, it's guaranteed. Like the long-term trend of housing in Canada is that the curve always goes up. There's fluctuations up and down, but the long-term trend is upwards. So that is why I'm actually very excited to buy now, right?
You're right.
Because, yeah.
You're absolutely right. Jocelyn, can you share some example of motivated sales you have done recently? Because I saw some of your agreement and I was like, no way, you bought this for this much price. How did it go? Tell me a little bit more about those purchases.
Yeah. So in most cases, it just, you know, these are sellers who haven't had a lot of activity on their property, you know, and you'll see those because they've been on market forever. They've had different price movements. They've decreased the price. They've tried basically different listing strategies. They still haven't gotten good prices. Some of those will also be in smaller markets. Like right now, I do have a listing in a little community called Bimbrook, and my clients really want to sell. But that community is so small and far away from Toronto. There's not a lot of activity there. I was just looking at the stats. In the last 20 days, they had maybe 15 homes on market that are detached, very similar to what my client has. And only one out of that group of homes sold in the last 20 days. So if one out, it's so insane. There's no movement. They have to move. So I'm just telling you right now, I have a motivated seller. But anyway, it's just situations like that where
good to know. I'll send you an offer. Those are the kind of things we love, right?
Like that, right? Yeah. But I think the key is to just, look out for homes that have been on the market longer and look at comparables and offer, a calculated offer. I don't want to say like a bullion, but a calculated offer. You're the only one on the table. They have no other choice.
Makes sense. And Jocelyn, we were having a conversation earlier, and I mentioned to you after almost 4 to 5 years, I did a power of sale today, right? I haven't seen power of sales happening for a long time because, anytime somebody was getting in trouble, they'll just list the home on the market. They'll get 20 offers on it and the house would be gone after a long time. And it makes you happy as an investor, right? That there is opportunities of power of sales coming on the market. And if I were to take a look into my portfolio, the most amount of money I have made is from the properties I bought in power of sales because there is such good deals. A lot of investors count on them, right? Because that's image. And again, you need to have the ability to hold that property for a longer period. There's lots of complications with power of sales, but they're finally coming back to market, which, in one way I'm sad that somebody is going to be losing their home or so on. But as an investor, it's also a great opportunity for you to pick up something at an incredible price.
Yeah, absolutely.
How are you dealing with the situation of people being people are just not having confidence in the housing market. At
Yeah.
least from what I see, a bunch of my friends, not my investors, but some, of my relatives, of my close friends here,
Mhm.
they have lost all the hope in the real estate market. Are you seeing the same thing, or am I the only one?
So I am seeing it in a lot of people who are not very, I don't want to say educated, because some of them have like fancy degrees and all, but I mean like in the investment space, they don't know enough about investing. So what I say to them is get educated, learn more, attend webinars, just and make sure too you're learning from the right person. Because if you're just taking advice from the next guy who walks by, how qualified are they to give you investment advice? So I've told them, look at the people who are making big moves, who are changing the market, and see what they're doing right now. So once you're educated and once you learn what other people are doing, now like it gives you confidence to be able to make a decision. So that's one. Two, it's just been like think of a long-term strategy, really. Like if you're buying a property for your retirement, which is going to be in 20, 30 years, the price you're paying now for sure will go up over time. There's fluctuations in the market, but that's a short-term thing. Long-term, prices will always go up.
Now, to a realistic question, 3 months ago, in order to buy a duplex property where you could collect legal upstairs rent and legal downstairs rent, you were definitely paying over $1 million. There was no property under that. What do you think realistically in Guelph, Kitchener, Cambridge, Waterloo marketplace at the moment? What do you think you can get a property like that at the moment?
I'm going to say it's been fun to watch actually, because I'm always looking at properties and I see ones that I'd like to buy.
Mm-hmm.
Guess what? I've seen some properties in like smaller communities where like even from like 650, you can get something with 2 units. I saw one at 600 with 2 units. But I think on a more realistic, like if you want a nicer home ready to move in, the home that was around $1 million now should be around 800. Like you can find something decent at 800. And what I'm planning to do myself is just take my time, find those homes at like 600 to 700, and just buy those. And I know these homes in January and February, they were around $1 million. So if I can find them for 600 and 700, there's barely nothing to lose, right? And rents are the highest. If I can have my tenants move in when rents are still this high, then I'm winning. It's literally a win-win. And as soon as rates get better, you can refinance, and now you have lower payments, and a lot of equity in your home.
Strategy I have seen a bunch of my seasoned investors, they are buying homes and they're setting up smaller mortgage terms on them, a 3-year term or a 1-year term or a
Yeah.
2-year term. And the reason they're doing that is most of the people know this is that these interest rates are not going to be there in a couple of years, or at least their expectation is that these rates won't be there for a couple of years, and on that time their payments are going to go substantially down when the mortgage comes up for renewal. And you're absolutely right. I did a mortgage this week on a property where the purchase price was $670,000, a raised bungalow. Upstairs is probably going to collect close to $2,800 in rent, and the basement's going to be $1,600 in rent. And yes, the mortgage payment has gone up, but it's still going to be $1,000 positive in cash flow, right?
Yeah,
And
absolutely.
Jocelyn, as you are aware, I start buying in Northern Ontario quite a bit recently. And the rents you're able to achieve in Northern Ontario is absolutely insane. For a $350,000 property, you're able to get up to $4,000 a month in rent. And those are some of the things which are not possible here in Southern Ontario, but here there is different kind of stability, and there is different kind of stability. So again, depending on the person, like I see a lot of people, just because the bank says no to them, or just because they have heard that Bank of Canada has increased their interest rate, they sit back and they say, oh, I cannot qualify, so I'm not going to do anything. Or I cannot get a home in Mississauga or in Toronto, I'm not going to buy a home at all. In my mind, that's a very negative approach. Because in my mind, the way you should look at it is, okay, if I'm not able to buy a home here, maybe I'm able to buy a home in Woodstock, right? And pay less money, or buy a home in London, Ontario, in Windsor, Ontario, Chatham, Ontario, or somewhere north or so on, and maybe rent it out and let me make some equity in that home, and may in
Yeah.
future I'll be able to use that equity to buy a home where I want right now. And I have seen a bunch of my clients, especially the ones who were willing to listen. They have done that, and over time they were able to buy that property in Mississauga or Toronto, wherever they wanted, just because they bought the property somewhere else initially and rented it out. Okay, so few dates to Mike: September 7, October 26, and December 7. Projection at the moment is that we are looking at possibly two more interest rate hikes. What's going to happen, nobody knows, but Bank of Canada has been saying that there possibly will be more hikes, one in September and one in October or December. I don't think they're going to do it in December just because the Christmas is so close by. They want people to spend money. But we might see two interest rate hikes in September and October. And again, both of these hikes more than likely will have a negative impact on the market, or it might have a positive impact. We don't know because the supply of the new homes is going to start hitting a record low level. So that might prompt people who wanted to only buy new homes to start jumping into existing housing market, and that would increase the price. Jocelyn, what's your thought? What do you think is going to happen, being that you're out there? I really want to know, do you see interest rates going up again?
Simply because the Bank of Canada has said that they want to reduce inflation, and inflation is still out there. I do think that they will increase it a little bit. I think from like what I've read, they were saying that they are looking to get to 3.5 for their overnight rate. So, maybe two hikes are, gonna bring them to 3.5. That could happen. But I think that we'll get to a point where the economy can't take any more hikes. So I feel like things are softening already. Like I've been talking to contractors. They don't have as much work as they had a few months ago. And that's because people are realizing the prices are going down. If you spend time doing renovations, you won't be able to get the value that you have in mind. And with rates going up, people have less money to spend. So I think we'll get to a point where the economy will just be at a point where you can't increase it anymore. And that's the point that I'm waiting for.
The challenge is,
Yeah,
Jocelyn, we don't know which point it's going to be, right?
Yeah, we don't know. That's the thing. Yeah.
One of the biggest mistake, I was fairly young when the 2008 downturn happened, right?
Mm-hmm.
But the people who invested money on that time in stock market or in housing market and so on, they were the biggest winner. I feel like, we don't know if there's going to be next two hikes or not, but if you are able to, and this has been always my strategy with my investment, it doesn't matter, it's a good market, it's a bad market. If it is a good deal, that's all that matters, right? And if you're able to retain it for some period, it doesn't make any difference. Just to share a really bad deal I hit a few years ago, 2017, when the market was at its peak, I went and bought a house in Mississauga, and on that time I paid $760,000 for a property, which was insane. But I had money, and I did not wanted to keep that money in the account. And in 2018, that market went negative, and 2019 it barely covered up, and 2020 it was a bit higher. But in 2021 we sold it way over $1 million. Okay, so if you can just hold a property for some period, right, then even your bad decision at a bad time gets recovered. I also know friends, and I have been in these shoes, where I always stretch myself, or when people bought and they were not able to retain and they lost money. It happens. So again, hiring a professional and going through all of your avenues and looking into the option where you can hold a property for 5 to 10 year period if needed. Okay, that's not what you want to do, but if you can, that is the ideal scenario. Okay?
I also love that you said something about a deal being good. Like if the deal is good, then it's a good time to buy. I'm finding that a lot of people who are sitting on the sidelines do not have a deal criteria in mind. So when you say a deal is good, you must have a means that you use to measure how good a deal is, like knowing your numbers and knowing what you're looking for. Could you share what that is?
So my way of looking at it is when you're buying, that's really the time you're gonna make money, because at the sale you're gonna really get market price, right? So my way of looking at a deal is it has to be at least 10 to 15% below market price. That's the way I judge a property as. Now,
Mhm.
when I started, I was dumb enough. I had no idea. I would just buy whenever I had money. But again, that's at least I did something. I have friends
Yeah.
since like 2010, 2011, and every year, we meet up on Christmas or holidays, and they were like, "Oh, you were so lucky you bought your first home and the prices were so low." And I'm like, "You were making a lot more money than me. You had a lot more money saved up than me. And
Yeah.
all they are waiting for is, oh, the whole real estate market's gonna crash and then we will buy."
The bubble is gonna burst.
Oh yeah, the bubble's gonna burst. I have heard that so many times. Like I have a really close friend. He's been renting now for 15 years and his rent is over $2,500 a month. Every couple of years, the landlord changes something, so he has to move to a new area. And he has substantial savings, but he doesn't buy because
Yeah.
he's waiting for the bubble to burst. Right. So again,
Well,
I'm
if he
not
doesn't buy
blaming.
now, then I don't know.
Yeah, I'm
Yeah.
not blaming the person. It's just he is who he is. But on the same
Yeah.
time, at some point you need to jump into the marketplace, especially for your
Yeah.
own home, and you need to start working on paying that mortgage as quickly as possible, and possibly creating some other investments on the side. Um,
Absolutely.
what should you do? It really depends on your circumstances where you're sitting. I can tell you this much. Most of my clients who own 20 plus homes have taken out equity now from the market when the interest rates are ridiculously high, and they're buying now. What I couldn't understand was in January, February, a lot of these guys were selling homes and they're buying now. So if you can find equity or if you have cash sitting together, you are in such an amazing, amazing place to invest at the moment, because you can get something really undervalued. And I'll share a quick example with you. I had one of my investor who bought 6 or 7 townhouses from another investor who did not anticipated the higher interest rates and was not prepared. And as a result, he couldn't close these from a builder. He had bought these townhouses in 2018, and this investor bought all of these units from him at 2018 prices. Each
Wow.
unit he made about 150 to 200,000 right at the time of the purchase. Again, if you have cash right now, there is some incredible option. Now, I'm not saying just jump into any deal because that's not the right strategy, but do hire a competent realtor, to reach out to a half reasonable mortgage broker who does this, for a living. I met up with someone today, and this mortgage agent, he has full-time job and he has a part-time job, and then he's doing mortgages on the side. And he was complaining how he's not able to get business, and my, and I was so shocked. I don't know how someone can do that, because it's such a time consuming and time demanding job that you have to put 100% of your energy into it in order to make sure your deals are getting funded and you're meeting your clients, lenders, and regulation requirements. Otherwise, there is no way to do it. So make sure when you go to a mortgage broker, you know who they are, what they do, and on the same time, they have experience in investments.
Yeah.
If the mortgage broker hasn't bought rental properties or sold rental properties, uh, they might not, they might be great at their job, but they might not be able to set up a structure for you in a manner which would be helpful. So again, look into your circumstances, and if you have cash, absolutely, this is the time to reach out to a professional and see what you can do. Jocelyn, what do you, I know you're making some big changes for yourself. What do you think
Yes.
people's next step would be at this point?
First of all, I would say don't panic, because a lot of people are panicking. They're panic selling. I'll give you an example. A client of mine called me and said, oh my goodness, what am I going to do? Prices are dropping. And I said, wait, don't panic. First of all, your home is cash flowing. You bought it as a long-term investment strategy. It's not hurting you in any way to hold it. Just hold it. You haven't lost any money until you sell. Market fluctuations happen. So what I've been telling my clients when they call me is like, okay, don't panic. Let's talk about it. Do you really need to sell? And most of them don't need to. They just have to hold their position. The properties are cash flows. They have nothing to worry about. So that's one thing. Number two is be careful who you listen to, because if you go to, let's say, your neighbor who has no properties, they're like, oh, be careful out there. It's really bad. Everything is crashing. They have no opinion. Like, they have the advice they're giving you is coming from a good place, but I don't know if it's qualified advice. One thing that I've learned that has maybe gotten me to where I am is be careful who you listen to. Who do you take advice from? And Farhan, I love what you said, like, work with professionals who are ahead of you in some ways, you know? Farhan, when I started working with you as my mortgage broker, I've learned so much from you, because you are doing what I'm doing on a regular basis. You're investing in real estate. You have a variety of clients who have come across the different problems that I'm going through as an investor, and you're able to remember a solution, or you even have the connections in banks that will make certain exceptions, you know? I don't know what exceptions they would make, but I'm just saying that because you have that experience and because you have that clientele, those client profiles that have been through what I'm going through, it's much easier for you to solve problems. And it's much easier for you to come up with solutions that are very unique to me, because you've seen it before. The same applies to a lawyer. We've worked with some lawyers who are now real estate lawyers. And and sometimes they've killed deals simply because they don't know how to handle these conversations. So it's just like, be careful who you take advice from. And that is more important now than ever before, you know? And a lot of the times when people come to me and they say, oh, a friend of mine told me to do this, I'll say, how many properties does your friend have? Would you exchange your financial position with them? If you wouldn't exchange financial position with them, if they're broke, why would you take advice from them? Because their advice has gotten them to where they are. So why would you take that advice? You know? And we love our family and friends, and a lot of this advice is coming from a good place, but is it qualified?
Yeah.
Right?
Right.
Yeah.
And Jocelyn, I have worked with few people in my life, but probably one of the most competent, hardworking person is Jocelyn. With no comparisons. I work with so many realtors, and there is some really good realtors out there. They really are. But there is some really, really terrible realtors out there. They don't care about anything but their commission. They will do whatever they can just to sell the property. And that's such a wrong approach to real estate. I have seen how hard you work for your clients. I've seen how much further you go than, an average realtor, and how much background work you do for a normal person. That's why I've used your real estate services multiple times so far. And I've been very, very, very thankful for you giving me that opportunity. So, if you are an investor, even if you're a first-time home buyer, and if you have questions, I would highly, highly encourage you to speak with Jocelyn. And Jocelyn is one of those realtors that if she's not able to get you the answer, she's going to recommend you to someone who can find that answer for you. Might be, and same thing with me. Like, what we are going to do, if I'm not able to do a deal, I'm going to recommend you to a place which can get that done. And it happens more frequently than I can admit, but lots of time that's the right approach. And I've seen Jocelyn do the exact same thing, where I've seen her recommend different realtor to a client just because they were the right person to help that person. So please reach out. We are happy to answer questions, go through the details.
We have 2 minutes, but we have a few questions that were submitted. We probably won't be able to get to all the questions, but maybe what I can do is I can call those people and we can arrange like a one-on-one answer to their questions, but I'll just ask 3 questions that are, the top questions here, like it's been repeated a few times. So one of the questions is, why is it difficult to get financing for self-employed people?
I wish it was a simple answer, and it's not. The reality is that the way lending is set up, if you're an employee, you have an exact salary. It's very, very easy to know what your income is, what your income level is, and what you have earned in the past. When you're self-employed, most of the people have a gross income and a net income. And it's very difficult to know exactly how much is the gross income. Net income is easy to get. Building cases on a self-employed client is much more difficult than an employed client. And that's where you need someone who understands self-employment a bit more in detail. I'm self-employed. I would say about 70 to 80% of my client base is self-employed people. Uh, there's a lot of solutions for self-employed clients, and generally when you go to most of the banks and financial institutes, you have to understand they don't have trained staff. They are employees. They do not know understand how self-employed works. Some of them do, but most of them are not competent enough to handle a self-employed client, especially who have multiple sources of income. So I'll share an example with you. Just today I have had a client who went into one of the major bank and he was turned down by them. And then he came into my office and I submitted the application to the same financial institute and it was approved. Okay. It wasn't that we lied in the application or so on, but he was taking salary, commission, and dividend from his corporation, which the person at the branches did not understand. Or I see clients all the time who pay themselves very little income and leave the income in their corporation or in their business. What a lot of people don't understand is that income can be added into your personal income and a business case can be built and you can qualify for much higher mortgage. Again, it comes down to hiring a competent broker and he should be able to navigate this very easily. Self-employment is not the end of the road. There is plenty of lender who will lend to them. Joseline, you're self-employed. Is it more fun getting a mortgage? Is it more fun getting a mortgage as self-employed person or as an employed person?
I think I'm very lucky that I have you as my mortgage broker because sometimes I even forget that I'm self-employed.
You are. But you see the documentation requested is a lot more. When you're employed, it's all just job letter, pay stub, that's it. But when you're self-employed, you have to arrange your T1 generals, your notice of assessments, your business financial statements, 6 months of business banking statements to see what your cash flows are like. And if you have a corporation, welcome to our world, then you need to have T2s and business financial statements. And then you need to provide how your business makes money. So there is a lot which goes into it. But again, reach out to a half competent mortgage broker. He would know exactly what to do. I'll leave it at that.
Thank you very much, Farhan. That's actually a comprehensive answer. So another quick question here. I think we'll only get, this will be the last question because we're already at 7:02. But I've seen it a lot and I've seen it a lot of the times with other webinars that I've done in the past. So I want to hear your opinion. Investing in condos, like pre-construction condos, and somebody's asking even like comparing GTA as compared to outside GTA. Like, what do you think, Ray? What's your opinion when it comes to, I think we've already kind of touched on this, but we have a question here that addresses that, and I wanted to just hear your opinion once more.
So personally, if you were to take my opinion, I'm not in favor of investing in pre-con condos. And the main reason I'll tell you is most of the condo towers, when they're going up, they are paying realtors a ridiculous amount of commission, sometimes up to 10-12% of commission in order to sell something which is not all condo buildings are bad, but especially at the pre-con level, you have to have a very, very competent realtor to walk you through it. It makes a lot of sense if you're very wealthy. Like I have clients who are worth 100 million plus and they buy. For them, it doesn't make any difference. It's a very small portion of their network. But when you're starting off, if you're going to live in it, it's a different story. But if you are as an investor going into a pre-con condo, be very careful. It's much more complex road than what people think it is.
Yeah. And I 100% agree with that. And I think for me, another factor that comes into it is what you said earlier. You make money when you buy. I find when you're buying pre-construction, you don't have control. The builder sets the price and you have to go with the builder set. And in most cases, they're selling them for future prices. So they're assuming that they'll go up. So they're selling this thing that could easily sell for 500 now. They're selling it for 600 today, hoping that it'll be worth 600 in 2 years from now. So you're not really making money when you're buying. And that's why I don't like them. I don't like pre-construction. I've bought a few, but most of them I actually bought just because I wanted to go through the experience for my clients when they're ready to back and, kind of tell them from my own point of view, what I've seen and what I've experienced. So yeah, I do agree with you, especially in this market. I don't believe in condos. Like, I just think that, first of all, they don't also give you good cash flow, right? Because you have to pay those condo fees and you have to pay all these things and you can only rent it for so much. So I don't believe in pre-construction. I think that people should stay away from them. There are unique cases when you get amazing deals, but those are very unique cases and there's very few and far situations where you get a good deal.
Just one last thought on it. I just recently had a client who bought a pre-construction condo and found out after he bought it that in that building, you're not allowed to rent.
Wow, imagine.
Yeah.
Imagine. Yeah, that's crazy.
And it's just the restrictions on them. If you have no other options, I get it. But if you have options, especially in this marketplace, there's plenty of options.
Yeah.
Go for something which, if you want, like newer properties, there's nothing wrong with it. Buy something which is a year old or 2 years old.
Yeah.
Nothing's gonna happen to it. It's as good as.
Yeah, and especially in this market, you can negotiate those terms we're just talking about. You can get something that's 15% below market value. You cannot do that with a builder because a builder, they set the terms, right? These are good conversations to have. Thank you so much for being here, and I appreciate your time and your insights. I hope everyone here on this webinar has learned something that will help them reach their investment goals. If you have any further questions, please reach out to us. Our contact information will be available. It will be sent in an email, including the recording of this webinar. And if you'd like to schedule a one-on-one with Farhan or myself, please let us know. We'll be happy to do that. So thank you again for attending. I hope you have a wonderful evening. Thank you again, Farhan. It's been amazing.
Thank you for inviting me, Joseline.
Yeah.
You have a wonderful day, and it's always an honor to talk to you. I learn so much from you every time I speak.
So do I. It goes both ways. So thank you so much again for your time. And thank you everyone who's on this webinar. Thank you.
Take care. Bye.
Take care. Bye.